Hello, everybody. Everyone who got here early, thank you for being here, guys. Hope everyone's doing well. Welcome to episode 3 of Market Power Hour. I have on the horn with us right now Mr. Joshua and Mr. Bitcoin Schmidtcoin. Um, they will be kicking things off here shortly. Be sure to give them a follow. Let's go around the horn real quick. I guess Schmitty, let's start with you. And you don't necessarily have to introduce yourself. I think by episode 3, everyone kind of knows you. But just remind everyone of your how to find you and that kind of stuff, and then we'll dive right into it. Go ahead.
Yeah, most of the stuff that I do is on Twitch, and I post recordings on YouTube, occasionally on Twitter. But you can follow me at uh, twitch.com/Bitcoin Schmidtcoin, or on Twitter, BTC_Schmidtcoin is where you can find me.
Yay! All right.
I was just thinking about this because Twitter's kind of gone down the tubes, and Twitter has
Mhm.
always been the constant for the crypto community, right? There was Reddit, there was TeamSpeak, there's Discords now, which are massive, obviously, but to see Twitter just sort of go swirling down the drain is pretty sad because that's where the crypto people hang out.
Yeah.
So I
Wait.
don't know, like I've got stuff on Medium, I got stuff on YouTube, right? As do you guys. We got stuff all over the place, but it's hard to like track all that for everybody all the time. So anyway.
Well, Josh, remind me what's bad about Twitter or what's happening. I haven't really kept up.
Twitter, the quality has gone down, as far as
Like conversation, that kind of thing.
conversation, audience, bots. It's just the whole like check mark stuff. Anyway, I digress.
The vibes are down.
The vibes are down. Not because of the bear market either, just because.
No, it's just because people suck.
Yeah. Well.
Got it. I'll tell you one kind of weird thing. I've been in my free time doing some of the CS:GO, trading and this and that, and I'll put out just a commentary tweet and get 1,000 likes, and then you do something on and then you do something on crypto Twitter, and it's like 10 to 50 maybe. It's crazy, and I have 500 followers over there and 20,000 on the CT side. So we are in like the teeniest little echo room, little padded wall chamber, and there's not a lot of people here. It's become painfully obvious. I'll tweet something out about it later, just showing the numbers and stuff. It's crazy.
Yeah, I mean retail's for sure gone, but
Mm.
I'm just in general, like I'm finding it hard to like, where do you post stuff? Like LinkedIn? Is that where you go? Like I don't know.
No shot, right?
I don't know. Like it's just weird that it's all fractured and messy. And anyway.
Yeah, I gotcha. Well, I guess let's just jump right in, guys. So, audience, again, this is Market Power Hour and emphasis on hour. Our goal is to get you out of here within the next 50 minutes or so. So that is the goal. And I guess just as a reminder, I'm going to continue streaming after this because there was a wrench thrown in my usual stream time later tonight. So I'm just going to do it after this, and then we'll call it good. So for my audience, just FYI. Schmitty, you want to start things off and share your screen, and we'll go from there?
Yeah, let me figure out how to do that.
Right. I've learned. Josh said to look for share tab rather than share window.
I got it. No, okay. I went with share window. Is that a mistake?
I don't know. Something about resource usage.
No, you're good.
But it's whatever.
Well, everybody, Powell raised 25 basis points.
Yeah, say that again. Say that again because it cut out a little bit.
Powell raised rates 25 basis points today, mere moments ago, signaling as well that they would be halting any further rate hikes beyond today. So we'll see what he has to say in the press conference at 2:30 Eastern. But Bitcoin just kind of flat on that news.
Yeah. Okay.
Go ahead.
Okay. Cool.
Run it, baby. Run the drip.
All right. Here I go. So for those who are unfamiliar with the way that I view the markets, I almost always take a top-down approach, and I kind of branch off into more fractured markets. And the way that the overarching thing that I always watch is Dixie, which is the dollar index, and is a relatively weighted comparison between the dollar and other world currencies. And the big takeaway here is that we're sitting on this multi-decade zone here. This has been defined since the mid 80s, 40 years essentially. and we're sitting on this major level. And for me, the general heuristic that I use is dollar down equals risk on environment for things like crypto, equities, whatever you name it. If it's not holding cash, it's anti-dollar, right? So when I look at the Dixie chart, you don't have to get like super low time frame and look at like what's it doing on the 5 minute chart. I personally don't care about that kind of stuff. I look at it from like weekly, sometimes daily, but mostly weekly and monthly, just to get an idea of the trend, right? Um, the last bear market came about on this major rally, and so my particular point of interest is the opposite side of it is a bear market for Dixie equals potential bull market for everything else. And right now, as Bitcoin is kind of like hitting this zone and it's kind of chopping around and stuff, which I'll get into in a second, no coincidence here that that coincides with the dollar slamming into support. So, what I personally am looking for is a break of this support and most likely going to carry us down to the bottom of the range here, something like this. But in general, it's not a good idea to front run support breaks or resistance breaks, right? You don't want to short into support and you don't want to buy into resistance. It's generally a better idea to risk off in these sorts of conditions. And until this thing breaks, which by my definition would be, a monthly close, you could argue a weekly close below this zone here. It's kind of like a no trade zone for me, which brings us over to our Bitcoin chart, which is currently seeing Chop City. Um, if we look at the daily chart, it's just been super volatile within this tight little range. And by little, I mean it's like a 10% range, something like 16% range, defined by the 26.5 and the $31,000 levels. And essentially what I'm looking at is like, okay, well, if Dixie breaks this support, that usually means Bitcoin's going to rally up and vice versa. If say Dixie bounces or whatever, that's going to take Bitcoin down. So the two main things I'm looking at is, what is Dixie doing at that support and how is Bitcoin reacting to it? And it's reacting very reliably, right? Like if we look at the Dixie chart, even though there's monthly candles, we get a little deeper in the weekly candles, we see that um, most of the slamming into resistance takes place as Dixie tests this level. And so for me, it's really cut and dry. There are a couple of things that we can get into that's in greater detail. Like, we had this really nice head and shoulders bottom. So we can start to derive like downside targets. If this thing does break to the downside, you can kind of look at this thing almost like it's a head and shoulders top. Like I see a very good argument here for this to be a head and shoulders top. And so if this thing does break down, the general takeaway is that it's not necessarily a bad thing for the market to pull back. If anything, it's probably a good thing. And if it, we can talk targets here, right? So the general measured move for a head and shoulders top, you just kind of take the neckline, which we can roughly define as this horizontal here, or slanted, whatever, however you want to draw it, and we measure the distance between the neckline and the head, and then we just take that distance and project it from the breakout point, which would be 42.5, something like that. That would have us targeting 22.9. Now, what I personally want to see is if we do see this breaking down of this head and shoulders, I want to see it underperform the target. One really good sign of a bull market is that bearish targets tend to underperform, and vice versa. If you're in a bear market, bullish targets tend to underperform. So if we do get a breakdown of this head and shoulders and it fails to reach this target, that is in my mind a really, really good sign that we're probably in for some continuation to the upside on a macro basis. Maybe taking out a new high, running prior levels, things like that. So this zone is a major zone of interest. I mentioned it the last power hour. This 23.8 to 24.2 zone. If we do pull back, I really, really want to see that hold. It would be a really bad sign to me if we do close down here, because that typically indicates that we're going to run deeper for liquidity, and the next line of liquidity is down here. So This is the level to watch, in my opinion. And just before I wrap it up, the bullish counterpart is, well, what if it doesn't break down at all, right? Like, what if it just proves to be a continuation pattern? The sign for me for an invalidated head and shoulders would be watching this level here. We have this zone of prices here that has, anytime we have a zone, I call this a point of interest, um, where it's never provided support. It's blasted up through it. It's blasted through it. Like, it's never been a zone of support. And so if we can provide a place for the market to flip a zone of uncertainty into support, this is a really great sign that we're actually not going to break down and we're going to move up and probably break out of this range to the upside. So there is a bullish and a bearish interpretation. And for me, it's pretty cut and dry. If we flip this level, this zone, this, what is it, the 28.5 to 28.7, this is a really good sign that we're actually going to continue to the upside. But for me,
Okay.
Yeah, I think the first step of like any bull market invalidation of a bearish reversal, that tends to move us higher, as it did in 2019. Very similar setup where we had this like messy head and shoulders, and then we ended up breaking out of it. We had tons of like news driven nonsense too. There was a Bitstamp flash crash effectively. I can't remember if there was a Binance thing as well in there. But anyway, that went higher. So
yeah,
it's not like we always print pattern after pattern after pattern, but it seems like lately that's what we've been doing, is like pattern consolidation, breakout, pattern consolidation, decision, breakout, right? Anyway, so I agree with you. I think head and shoulders on low time frames, regardless of how ugly it looks.
yeah. I mean, you can look at things like trend metrics too. Like, they're all bullish. If you're looking at like daily / weekly, like, even if we slap the Bollinger Bands on like the weekly, it is objectively bullish.
Mm-hmm.
The you know the 80 IQ takeaway from Bollinger Bands is, like, if you're in the upper half of the B bands, it is considered a bullish trend, right? We see that here. And if you're in the lower trend of the lower half, it is considered a bearish market condition. And this zone of prices that I showed for like the pullback, the target for the head and shoulders, is right in line with a logical correction. A correction target in a bull market is typically the weekly B bands midline, and vice versa in a bear market. It tends to gravitate toward this B bands midline before continuing. Like, we saw that before the run up in 2019 right here, which, funny enough, it was actually this was a head and shoulders top here, that pulled back to the midline, and then we saw what happened next. So, any pullback here, like, to this zone, this is totally fine by my books. It's not going to be an invalidation of an uptrend, and it would actually provide a really good buy opportunity. Now, with that being said, if we do start closing below here, that would be a cause of concern. But in general, like I said earlier on, you shouldn't just assume that this is the time that is going to break the objectively bullish trend. And so pullbacks should be seen as buying opportunities when you have objective bullish trends, and we have an objective bullish trend. So looking down here for buying opportunities is, people that haven't gotten in the game yet, or maybe they're looking to add to their positions, like, that's a logical place by my books.
That chart is wild to me because those are weekly candles for those of you who didn't realize that. So that's what, 1, 2, 3, 4, 5, 6, 7 weeks of literally $28,000 to $29,000. It's just 2 months of sideways, which is like pain. It's just, markets get chopped to death. This is where a lot of people have been completely liquidated, after surviving a bear market, and then they get to something like this, try to short too early or long too early or whatever, and they're gone. That's it.
Yeah, I mean, it's a great. I mean, these are great market conditions to be sitting in spot. But unless you have your wits about you, and you're trading a high time frame, high leverage, this is a really good market condition to get your feelings hurt. If you're trading anything more than like 5x, anything between 8x and above, this is just liquidation city if you're not managing your risk properly. Anyway, that's it for me.
Nice. Okay. Josh, you want me to go, or did you have something?
Yeah, go for it.
All right. Let's do it.
I think for the most part, we're all like in agreement, and it kind of shows you the power of technical analysis. Is it self-fulfilling prophecy? Is it just
Right?
people watching the same stuff? Sure, maybe, I don't care, right? But I know what should happen based on historic biases of patterns, right? So that's why you can say things like, yeah, this is bullish or bearish, because it's happened 2,000 times before.
Right. Exactly. Okay, so I'm going to attempt to bring some fresh analysis to the group. Basically, there's a lot of things that I've kept my eye on over the last, I guess, 2 months now. There was a big macro megaphone pattern. There was this, there was that. There's all kinds of stuff. But I think today, like what I wanted to do is basically erase it away and kind of take it from the beginning and see where we are. Schmitty pointed out the really nice kind of macro head and shoulders. I do like that, and I'm in line with that. I respect it. I do kind of like what the market's doing right here too. Oh, mods, can you kill that? Sorry, my bad, guys. Yeah, if y'all could turn that off. Actually, I'm gonna kill it real quick. All right, done.
What the hell was that?
That was one of my mods made that as like a joke when people sub or resub
Oh.
or whatever. So it was like a meme. Anyway, I think I turned it off. But yeah, just this consolidation in this trend line, right? We have a series of lower highs, higher lows. So this just kind of works out to being sideways. This is about 2.5 weeks or so of consolidation. It's not the best in the world, right? Because there's some clear trends leading into this. We only have really arguably a couple touches on the support. So I don't really expect this to hold a whole lot, but kind of in line with what you were saying, Schmitty, one thing that would just be kind of chef's kiss level, oh yeah, that's typical market manipulation, screw everyone kind of thing, would be some sort of breakdown to sort of run the lows of anybody who had a long in this level just to come, just to go back and like, haha, screw you. Anybody who was playing the head and shoulders, who was shorting a breakdown, who was doing whatever, to see, the longs get blown out with some sort of break, there and slash there, only to turn around and moon it once everyone was shaken out. So I don't know. That's kind of my conspiracy theory of, what we might see soon, just because it screws everyone, which is kind of poetic. Yeah, lots of debate. Exactly. So that's Bitcoin in a nutshell for me. I don't really have a whole lot more to offer other than, we're between pivots. I'm a big fan and have been for a while of the yearly pivots. We're between the pivot level itself and the first extension, which is at about 33,000. We're just kind of drifting along. So for me, what I would have loved to see is some sort of impulse into, almost like a parabolic up only impulse into some level up here north of the extension, just to give it all back going into the end of the year. That would make a lot of sense. Sideways chop does not really help me know what's coming or what's going on. So I don't have a great setup to talk about right here, but we'll keep our eyes on it. And like Schmitty was saying, when I look at the B bands, when I look at moving averages, when I look at all sorts of the Ichimoku stuff, we're objectively bullish. There's some hesitation. There's a sort of like, okay, well, maybe it breaks down soon or whatever, but it's nothing objectively bearish about it. And I think it's an important thing to point out to people, because a lot of people will hear a pullback and they'll think, oh, we're going back to 15. Or I've actually seen on crypto Twitter some people talking about, even like yesterday, as recent as yesterday, we're going to break through 15 and go down to like 5,000 or 2,000 or 3,000. So it's like, I just want to remind everyone, like, while these are uncomfortable instances of sideways, we're hearing calls of 3,000 and stuff in a candle like that. This is a 3-day candle, so this is the last 3 days of action. Comparatively, this is a nothing burger. This is more just sideways. This is nothing to write home about. So that was that on Bitcoin itself. A couple other things I wanted to point out. Ethereum is very interesting to me, and I'm sure Josh you'll go into this because you do really good Ethereum analysis. But one thing I thought was very interesting is this purple line here is the Ethereum unlock, and you see we had an instant rally after the unlock, breaking above this pseudo rising wedge. This is only about a week or two worth, so not the most macro of macro patterns. So take that as you will. But then immediately gave it all back and came back to the level of breakout. And since then, it's just kind of been in this can't freehand draw a line to save my life. There we go. It's just been in this sort of consolidation, more macro wise. And I think, Josh, you pointed this out before, at least we had this conversation in last Market Power Hour. One of the things I think would be very interesting is a sort of retrace to the lows. Whether that coincides with a pullback in Bitcoin or not, I don't know, and I kind of don't care. But just as far as setups go, there's a really interesting correlation between, hey, we had a sort of rising wedge, if you kind of tilt your head the right way, it broke up to some level, and then ran back to the lows / close to the lows. Here again, we have this rising wedge, broke up, and now we're back in the, this trade range. So I just think it would be very interesting to see, whether that's come back to some midline point, find support before a breakout, or coming all the way back to the lows. And if we want to go to the Wyckoff accumulation schematic, and again, I feel like I'm stepping on your toes a little, Josh, because you brought this up before. So I'll leave this for you to kind of go through. But even something like that would be the best case, as uncomfortable as that might be for everyone. Yeah, I mean, think about the pain and the like, this is over and failed experiment. That idea of people like the words that come out on crypto Twitter. So, but as far as structure goes, that's one of the best things you could possibly see. Run all the long, shake out anybody who could be shaken out, strong hands only, and then up only. Here we go. So that's my Ethereum takeaway. One thing I wanted to point out, a couple other things here. GBTC, when I look at GBTC, the only thing I really can see here is either this head and shoulders, just like Schmitty was talking about. That to me is probably the primary thing to watch, and pretty much anything else is secondary to it. But worth noting is there's some argument to be made for a sort of falling wedge here. And in any event, here's why it doesn't really matter how you view it. In any event, a breakdown is bearish. In any event, a break up is bullish, right? So whether you're looking at a head and shoulders, whether you are looking at this falling wedge, it honestly doesn't matter. They're both, as far as, structural levels of importance. If you break down from a head and shoulders, that's very bad. If you break up from it, that's like one of the best things you can expect. And typically you'll see things go from like 20 to 50% just immediately, because it's one of the most bearish signals, and suddenly it got flipped on its head. And so the market, all the people that were selling or opening shorts in preparation for the expected move, quote unquote, they have to close and change their tune. Another thing that is funny to me is this is the S&P futures. Obviously, we had, within this 4-hour candle was the 25 basis point increase to rates. Historically, this has been choppy / bearish, kind of take your pick, and then the market recovers for days after. But here, this is a sort of anomaly that this is all the price action we got for this 25 basis point change. And I wanted to point out also, just because I thought it was funny, that once again we find ourselves in a megaphone. This year has been, I've never seen so many megaphones in my life. And
the year of the megaphone.
The year of the megaphone. I guess that's like all the textbooks, when they go back and look at it, that's what they're going to say. But
I think that's because of the general just uncertainty on any sort of probability. Like we're sort of going back and forth, oscillating between, a million, zero, a million, zero.
Yeah, it's so binary. We're either we're going to new lows or we're going to new highs, and there's no in between. Yeah. So anytime we make a new market low, the buyers step in. Anytime we make a new high, they sell off, and round and round we go. This has been the case since the 1st of April. One other thing that I think is interesting is, and this is kind of the other reason why I brought this chart up, we had a very clear inverted head and shoulders, and I recognize this line's probably not perfect, right? Wherever the neckline is, take your pick.
He's moving the line.
I'm moving the line, trend fitting, whatever. But this inverted head and shoulders, when I first saw it, I had a target level, or at least as an initial target level, let's call it, of up here, and we like ever so delicately wicked it in the recent pump to the high. So to me, that's interesting. Do we have a bias right now? No, I really don't, because if it hit any sort of target level to me, then that's almost like okay, let's risk off, or at least wait and see what happens next. In the meantime, you have this sort of head and shoulders in the medium time frame. So, could $4,000 S&P future, ES one exclamation point, could 4,000 be in the cards? Sure. Does that mean it's going to go to zero? Probably not. Could it just keep doing this whatever forever? Yeah, probably. Like, let's say that's what we're going to get for the next year. Who knows?
Well, we had tech earnings come out that were better than expected, and the market went, insane because the S&P is moving off of like 5 stocks, right? So,
Yeah,
like,
right.
because it's market cap weighted. So, those
Exactly.
stocks are going to have a greater importance than the rest of it, which maybe isn't so great.
Right.
And then we have FRC. Surprised it's taking us this long to bring this up. But we had FRC fail, and the market did not like that.
Mm-hmm.
Obviously, that's not a good sign of things generally. That isn't a reason to be bullish when banks are failing if you're
Absolutely.
in the TradFi side of the house. So
yeah, bingo.
And second biggest bank failure ever.
Yes,
Just,
ever.
And I feel like we're like dialed into it. Me maybe more so, but I haven't heard too much about it generally. SVB felt like it was like the sky's falling, but this one is just kind of
Meanwhile, the Dixie is making, historic lows here. Going back to a year or so.
The VIX, you mean?
I'm sorry, the VIX. Yeah. So we're making, 12 to 15 month lows on the VIX on like simultaneous to the worst bank failure in, what was it, like 15 years, something like that. So I don't know. It's take your pick.
It's the second worst bank failure ever. It's the 3 of the 4 largest bank failures in history occurred in the past 3 months. And yeah, the VIX is telling you, whatever.
Meh.
Okay.
Who cares? Who cares about all that? Yeah. And then I guess the last item I wanted to point out, because I think it's interesting, coin was.
What are those lines on your chart? Is that the moon phases? What's going on?
No, this is like
Those are
open and
market
close.
sessions.
Okay.
Market open close,
Sorry.
that kind of thing.
You should set it for that when you're looking at higher time frames. You don't see that shit.
I think it goes away at a certain level. Yeah, here we go, 12 hours.
Gotcha.
So we'll just
no,
leave
you're
it
good.
at that.
I was just like, what is that?
The moon phases. Come on, man. What's the witch's name?
Marin.
Marin. Yeah.
There's a witch.
There's a witch.
What?
Yeah. We'll talk about that off stream. Yeah, we got to catch you up, bro. It's gotten wild in CT in the bear market here. We've had to bring out like sacrifices and stuff, just try to bring it back. People don't understand what we've gone through. Anyway, we are breaking this sort of chop zone from 50 to 80, which is a hella big little chop zone. On the heels of this parabolic downtrend, we're suddenly find ourselves down below the horizontal. And I've got to get a drink, so I'm going to call it there for me. I'm going to pass it off to you, Mr. Joshua.
All right. Yeah, Coinbase is tough because of the regulation piece, right? I'm trying to find the right tab that I want here.
When you pull up your chart, I have a question for you.
Oh, sorry.
On your monthly Bitcoin Ichimoku chart.
Monthly Ichimoku?
Monthly.
Is that does such a thing even exist?
It exists. I should have a question for you about it.
All right. When I get to it, we'll pull it up.
Would there be dragons? What the fuck? Witches and dragons? What are you guys doing?
Yeah, so I think so. Jack was pointing out a lower time frame inverted head and shoulders on the S&P, and I think if people are like listening to technical analysis over the past couple of months, at least my technical analysis and like me talking about pattern this, pattern that, inverted Adam Eve, like that's all it's been everywhere though. It's not been like a trend. It's literally been pattern city USA all over the place on any chart you look at. Anyway, so yeah, we've had a series of higher lows. We've had tons of chop, and we're back at this level above 4,100. 4040 I think would be what a lower low at this point, right? There's a pivot there. I don't see anybody calling like this, and it's insane. It has no basis in reality, right? But TA likes it.
Yeah,
it's hard to deny making higher lows like this until we make lower lows, right? So I don't know. Maybe bread goes to $20 a bag or something up there, but that's what the TA says. Okay, look, I'm not trading.
Reasonable.
I'm just saying, look, this is bullish. That's, I don't know how else to slice it. There's nothing bearish about this chart. You can talk about earnings, forward earnings, every single metric fundamentally, but ultimately this looks really good and continues to look really good, so long as it doesn't make a lower low.
NFA.
Yeah, so there's actually some supporting evidence of that too. If you look at the monthly SPY chart, or whatever derivative you want to look at, that's the upper B band on the monthly chart. That's like, we just closed above the midline, and typically that means we're going to target the upper band, and so the upper B band is pretty much your target that you have there too. So that's pretty funny.
Interesting.
Wow.
Yeah, as much as everyone wants to be bearish on everything and say a recession is priced in and all this other stuff, I'm just looking at this thinking, okay, like, yeah, it's possible if we keep making highs at this neckline, 4,200. Good, let's go for it.
Look, let me meme this real quick. Imagine a high time frame megaphone right here, with the left two support lines being like the downward slope of the megaphone, like the support line, and then going back to kind of, what is that, May 2022, the start of the resistance line. Hold on, I don't know if I can draw on this chart or not.
Dude, I'm a visual
Right
learner, and I
here.
have no idea what you're saying.
Right here, big, like this going all the way up to your level. I'm showing it on stream. I don't know if you guys can see it.
Dude, you need
right here.
This boy needs
I
Jesus.
see what
I don't know
you're
talking
saying,
about.
but yeah, I don't know about
What
that.
a meme. Wait, we already said 2023, year of the megaphone. So maybe
it is the year of the
maybe that's
megaphone,
it.
but I don't know about that. Anyway, so that's my view on the S&P, and if we're bullish on the S&P, we're generally risk on. I probably should have started with DXY, but
Josh, tell everyone what you were saying about what and I'm sorry if you already did. I don't remember if you did, but tell the chat what the Fed did not say, or what the market was pointing out that the Fed did not say.
Yeah, so everyone expected the Fed to hike 25 basis points today, even in spite of the recent bank failure. What they didn't quite know for sure, even though they were sort of pricing it in, was no more hikes beyond today. So the Fed, in the statement, the press conference is going on right now, took out any language regarding further hiking. So it looks as though we're at least at a temporary ceiling on rates. Now, Australia, their central bank, hiked after pausing. So, it's not like a guarantee that hikes are done forever, but it's a better sign for risk markets, who in the last meeting 2 months ago was basically like, yeah, they're one and done. Everybody was talking about that. It was pretty sure that was what was going to happen, which has subtly helped, I think, the bullishness. But you're still combating 5 and 5.25 plus risk-free rates. Like that is an uphill battle if you're at risk on instrument, because you need to outperform that in a risk-adjusted, whatever. Because why bother trading anything else when you can just throw money in a money market fund, right?
Right.
So this is gold, which has had quite a nice bounce after this gross consolidation. I only look at this on ultra high time frames, like Schmidt was saying, because it's too much to deal with on low time frames. But this should break up. End of story. Like, this is not bearish in any way, shape, or form. And if DXY breaks down and SPX breaks up, gold should go with it. And this measures to around 2,400. I mean, that viewpoint hasn't really changed, just because the TA itself hasn't changed. It hasn't budged. And then on the DXY side, it continues to slowly drip. It like Schmitty said 2 weeks ago, you can't really front run this stuff because it moves so slow, and you can get your head ripped off. But it does look like it wants to go lower. And if we stop raising rates and the rest of the world continues to raise rates, then there's an imbalance there relative to our currency. So that would help push DXY lower. So we'll see what happens in the coming months, but this doesn't look happy, like, doesn't look bullish. It could, go to 104, 105. Ultimately, you don't want to see this thing back above 106 if you're bearish, DXY bullish crypto.
Yeah.
And historically, when we're declining to the 90 level, 95, whatever it is, we've been bullish BTC. That's it.
I like that. That's clean.
And then to round out the TradFi legacy stuff, this is a regional banking ETF, KRE, and you're looking at multiple years here, but 2020, obviously, COVID, massive move everywhere and everything. But even recently, this was sort of foreshadowed a little bit. Hindsight is 2020, sure, but there wasn't a bullish pattern forming up here, right? Like, am I crazy?
Right.
There's a case to be made in both accounts that there was head and shoulders up there. So regional banking, just generally seeing a ton of turmoil regarding deposits and outflows because of rates, right? All this stuff's related. And this also doesn't look like a chart that wants to find a bottom anytime soon. It needs nobody wants to catch this knife, is what I'm saying.
Yeah, that chart is really interesting because those are huge percentage moves, and it's really, really aggressive about filling market inefficiencies. Look at all of the prior moves, even dating back to like 2016. The large impulse to the upside completely retraced to the breakout point. Then you had that super big move to the downside leading into the COVID shakeout that retraced the inefficiency, and now we're retracing another market inefficiency right now. The current level is taking. There's this concept that I've kind of come up with is like the impulse route, which is like whenever you see these huge bounding moves that clear without slant, like they have no respect for resistance or anything. Those routes, the base of the impulse typically tends to get retraced, and we just retraced one just now. The route being like maybe November of 2020, I guess it is.
Yeah. You see that on low time frame all the time, by the way. That concept that you're talking about.
Yeah, that's really interesting. That's like a 50% move it just did. It went from 60 or 75 to 40. That's almost a 50% move.
Yeah, so if I apply like technicals to fundamentals and I say this is going to need a ton of time to figure its stuff out, right? That it tells me that the regional banking stuff is not anywhere near resolved based on this price chart, So the reason I think this has been important to pay attention to is we've generally been trading in crypto land inverse to this pretty decently. Just anecdotally, I wake up, I check what is the regional banks doing relative to BTC just based on my watch list, and it's always inverse. Even today it was inverse. We opened red on crypto side and positive on regional banking side. And to everyone's favorite, Bitcoin, trend looks great. If you were around in 2017, we had multiple retracements, deep retracements. If you've only been here since 2020, you've had the luxury of just sort of riding riding the stimmies and whatever else, right?
Super cycle. That's
what
we
did have
used to say.
Leading into that, we did have an extended period of consolidation, right? And you typically do see, like we're seeing now, you see range expansion that is appropriate relative to the duration of consolidation. So we're continuing to see range expansion relative to the several months we spent consolidating. But if we look at like 2017, 2016, right, with Schmitty and Jack talking about these retracements, I mean, they were over and over and over until it was just done. But this is the 20-week moving average in the cloud, obviously. So none of that is out of the question here. I would love to see, I hesitate to say this, but I would love to see a deep retracement. You get news articles, you get attention, you get eyeballs, right? It's like that thing in Hot Wheels that like pushes the car again,
Yeah, little booster thing.
Yeah, it's like a price booster. And it could be anything. It could be event driven. It could be we had
Virgin Sacrifice.
We had a dev rage quit here. We had Bitfinex get hacked here. We had China bans Bitcoin a couple times. I think this was an ETF,
Yes.
Bitcoin ETF get denied. This was Roger Ver, one of these.
I think that one was Diamond saying that like Bitcoin is trash, and then come to find out he loaded up, or his company did, or whatever. You remember all that?
Yeah. Some of this was Segwit 2x stuff, right? Maybe here, I don't remember, but you'll generally see some sort of event relative to these very, very strong pullbacks. So it's definitely not out of the question. And we're in a zone here now where it's been decently strong support, decently strong like decision area. And I don't think it's crazy to just continue to expect us to chop about here. I don't hate it. And the downside, like Schmitty was saying, 25 is acceptable, 24, somewhere in here, that's totally fine. There's a massive TKC clamp if we look at just the cloud on the daily. And that's pretty substantial. Now we may see a full TK bear cross before any of this resolves. And then that's telling you to be careful because you don't see those in bullish continuation setups. When we have crazy bullish continuation, you never get that TK cross. It isn't to say that it's all over, right? There's plenty of instances where you get this cross recross stuff, but trend is your friend until the end. Things look okay from that front for sure. So you want to look at the monthly cloud?
Yeah.
Unsingled?
No, I'm curious on yours.
Oh, okay.
Okay, so because on singled, we closed below the cloud last month. So I was curious what it looked like on your settings, just because I don't have them saved on mine.
You don't bother settings?
They're beneath me.
Wow.
I think you can do the default button somehow.
What is it? I think I saved my defaults, maybe not.
Or what do you ask on the default settings?
No, I gotcha. Yeah, I see what you're saying. Doesn't look great.
Yeah,
but I'd have to.
Yeah.
I'd have to look at the rest of it. It's so hard on these high time frames because crypto moves so quickly generally.
Yeah.
But yeah, that's not great. I mean, you could argue on the weekly, we're still not above the weekly cloud. And it took a long time for us to get above the weekly cloud. To me, this is very much like 2019. The comparisons continue to add up. Where everyone could get excited at 40 and then we just chop around until halving, right? Which would be another 6 months or something easily. So I'm not going to get too excited until we're back above the weekly cloud.
What's wild, Josh, on that chart right there? So if you did a Fibonacci retracement from the 20K peak in 2017 down to the Pico lows of the 2019 bear market or whatever, that the retrace that occurred after that, so in May, June, whatever it was, that top is the 618 retrace of the Pico top to the Pico low. Like bull market high to bear market low. That was the 618 retrace.
Here.
Yeah. So what's interesting now is in the current, today's environment, so further to the right on the chart, like the 2021 high to the current bear market low, that 618 retrace would again be right above the cloud, in a very similar setting. So to me, this goes back to I love that conceptually as running that level and then giving it all back, or whatever comes next. But obviously we've been sideways for 7 weeks, so who knows? But
well, that's exactly why I don't play like this game of, we made it through the cloud, now we're going to keep going. Like, no, that's not generally how it works.
Mm-hmm.
The same thing with the Kijun. Like, if we go to 33K by July hashtag, then I can't expect too much more super quickly, because that's where the resistance level is. There's the Kijun in the cloud. Now, if we enter the weekly cloud, that'd be great, but that could take another 6 weeks. That could take us into Q4, right? Like we could go to 33 this quarter and do nothing for a quarter, and then make a decision to go to 40 into Q4.
I mean, weekly candles, like if for those that are watching that don't have much experience like actually trading these or looking at trend. Trend is a lagging indicator, and it takes a long time to turn a gigantic moving ship. So I mean, look how long it took us to get into a bear market condition. It's going to take us a long time to get into a bull market condition. Similarly, right? So that thing is going to most likely take longer than you think. I mean, even leading up to the bull market we had in 2020, like that whole consolidation from May 2019 to September of 2020, that was a year and a half of just brutal chop.
Yeah.
And that was post halving. Like that's how long it took post halving, right? The halving effect is never immediate anyway. It hasn't been historically. People arguing that the halving is priced in. Like, okay, well, people can't even spell halving, so I don't think they know about it.
You mean happening?
Yeah, whatever.
No, I know.
Is that what it is?
Also, and point, here's a point to make on the halving. Back in 2016, so the halving before this, the market actually dumped like 30% or something right after. Right. So, if you think that it's going to go up immediately after, the day after the halving or something, you're fooling yourself. Like, we don't know.
Yeah, and that was a Bitcoin or a Bitfinex hack, exchange hack. That's what that candle was. But
right.
Yeah. So generally, what we want to be is above the weekly cloud, several weeks out from after halving.
Yeah,
that's like the no-brainer take. Just to wrap up real quick, this is what we've talked about: low time frame head and shoulders. I don't like that we're below this.
Yeah. I'm with you.
What we call it, megaphone.
Yeah.
Line.
Macro megaphone.
Macro megaphone. Yeah. Not perfect, but definitely there. And again, that matches the levels on the trend stuff, 23 to 24. And the thing is, though, if we don't break down, like we've taken the other side of this, this was 2019 where we had pattern move up, pattern move up, pattern move up, pattern move up. So that's fine as well, right? But you can't sort of say, oh, that trend is your friend until the end. Yes, but I'm not going to believe it until I see it, until we're above the current right shoulder, whatever that may be. I can't remember what people were calling this. Do you remember the rising channel maybe?
I think at the time, honestly, I think it was 3 pushes to a high. I think it was viewed as a bearish pattern, right?
Yeah.
You see the 3 impulses before it finally breaks up. And so I think it got the market to short. I don't remember exactly, but I think that's what it was.
I think that that Peter Brandt was calling it like a what's he call it?
He blocked me, by the way.
Why?
I don't remember. I gotta find the tweet.
What'd you do to that old man?
I threw something. I threw some water on his analysis because it wasn't sound, and that was his response to block.
How was that?
Young whippersnapper. Show some respect. No, I think he was calling it like a channel continuation or something like that, because you can redraw that upper boundary and lower boundary to be a parallel channel, like you were saying.
Yeah.
Yeah, but I remember trading that, and that was really difficult because it had that humongous red day that just cleared all the liquidity below, and then it was like, man, that was and looking at it on the chart here, it doesn't look big, but at the time that was a humongous drop percentage wise.
Yeah, it was. So yeah, I do like our prospects for higher. I do like our prospects for canceling out a head and shoulders. We've done it before. It's not like it's out of the question. Few other last things. Dominance. This is Bitcoin's market cap against the world, and we're trying to break 50, trying to break 49. I think if you're alt denominated and we break 49 on dominance, you're going to be in trouble because Bitcoin's gaining on you. Basically, you're losing relative value if dominance is rising. So for those people trading, hoping for an alt season, I don't know. I don't see many people rushing to buy Solana or Avalanche on this regional banking crisis. Like that isn't where the narrative is right now. We may see a narrative shift, but I don't see that narrative for alts right now. I just don't.
I did mean to point this out on my segment, and I failed to do so, but just the fact that dominance is hovering around at this level for like 7-8 weeks, whatever it's been. And typically this is where it just insta V reverses and, you get little mini alt season or whatever. So I think it's a clear change of character that the alt guys need to take serious.
Yeah. So on your chart here, this is another example of that market inefficiency. If we break above the current range, I would expect an aggressive move to like 64 on dominance that
Mm-hmm.
that clears that huge inefficient, the giant, like because crypto is open 24/7, it doesn't have gaps, but it does have huge inefficiencies, which are basically the equivalent of a gap. And so it wants to run to that upper side. So if we do get a breakout from this Bitcoin dominance chart, I would expect it to have an aggressive continuation to the upside, and most likely suck liquidity out of alts.
Yeah,
So,
100%.
and-
This follows along with the other concept we were talking about, was the duration of a consolidation typically matches, the aggressiveness of the eventual range expansion. Because
Yeah.
I got to show y'all a chart, or just my my chart real quick. Hang on, this is super quick, but it's hilarious. Dominance. There we go. This is a level I've had on the chart since September 14th of 2021. Chat says this is not possible. This is which is 60.
Well, if you think about it, what don't we have? What don't we have right now? We don't have some mega fake billionaire pumping altcoins into the market, right?
Right?
We don't have that right now. We have like Pepe meme garbage, sure, but we don't have some guy taking Sequoia's VC money and pumping garbage,
Mhm.
So I think it's going to be hard to naturally get Bitcoin to lose dominance here, because we don't, there's no adversarial, it's Bitcoin against regional banks basically, right?
So
Right.
can one of you, I know we only have like 2 minutes left, but can one of you give me like a 30-second TLDR on this Pepe thing? Because I stepped away from Twitter for like a week and I came back, I was like, what the fuck are you guys talking about?
I don't know about it. I have a cool chart though, but Josh, do you know about it?
I don't know anything about it other than it's
Is
like
it just a meme coin?
Yeah, it's like 2 or 3 accounts who spin up these meme coins, and that's it. I mean, they're all pumping dumps. They're all trash. They should all be avoided. End of story.
Okay, that's what I thought, but
Yeah.
I wasn't sure if it was like another, like some celebrity doing a Doge style pump or what.
No utility, no value. The worst of the worst. Just nothing. There's nothing good. Nothing good about it.
Josh,
Sorry, I just had to
friends today. Oh look, and then this was. I was showing chat how, like, whenever you have a brand new coin, it's really hard to know kind of like where things are going. But the channel tool is really slept on. If you can find any sort of support line, you can draw the channel tool and then drag it up and try to kind of align it with some other previous high. And then that gives you kind of a forward looking, okay, where should I take profit, before this moment comes. That's kind of cool. It's useful. Anyway.
Yeah, it's like a pitchfork style.
Yeah,
thing.
yeah, same idea.
Not like use pitchforks, yeah.
Yeah, same idea.
Yeah, I thought I had. Oh, last chart.
Okay.
I have one more on Bitcoin. Where'd it go? I gotta find it. Sorry, I have too many tabs. Here it is. Okay. There was a decent case for this pitchfork.
How do I make your? I think you gotta share it again, maybe.
Yeah, why is it? It's like in a tiny square.
Yeah. Pin to the main screen. No.
Sorry.
Weird.
Josh, I like your face.
There we go.
There we go.
Yeah, there's a decent case for this. It's not terrible. It is a trend channel. It does hit the highs, hit the lows. Okay. It does give you an idea for, those 24 to 26K levels.
Yeah.
As kind of not possible based on this, but, I don't know. We'll see. I don't hate it, especially if we reverse and catch something down here. That just strengthens the case for this. It's very aggressive though, based on the rate of change, So
you remember how I pointed out GBTC could be argued to be in a like a falling wedge ish, or like a downward sloping pennant. If Bitcoin went on to do something like that, like also did it, it would go right into your lower bands, basically like sideways and down into your lower bands.
Mm-hmm.
That could be, I don't know, I'm just saying that could be interesting as well.
And last 2 seconds, I'll just share this ETH stuff. Not much has changed. It's still at the top of, I don't know. I wouldn't call this like bullish accumulation, right? Or whatever Wyckoff calls it up here. It just looks like a mess. Sign of strength, yeah. It doesn't look like anything. I don't know. There is this case for a multi-year ETH pitchfork, but yeah, I don't know. ETH mystery to me. Because you could argue
Yeah.
Adam and Eve like on this weekly, right? You could go to completely asleep for the next 6 months and just say, you know what, I know this is an Adam and Eve, it's at the bottom of the range, I don't care, I'm gonna stake whatever, and that's you might be totally fine, totally fine.
Yeah.
But I just think there's better relative value trades right now than ETH. That's all.
Like Pepe and AI Doge and NFTs.
Sure.
We need a witch coin or a dragon coin or something.
Please no.
Mods, by the way, we're going to name this episode Witches and Dragons. Easy view bait right there.
All right, boys. I think we'll leave it there. Unless you got anything else.
That'll do it. Schmitty, any final thoughts?
No.
Okay, good call.
Good talk.
All right, chat. That'll do it for episode 3 of Market Power Hour. Thank you all for being here. As a reminder, mods, spam these guys' contact stuff. I know you had something earlier, but be sure to do that. Big thanks to Schmitty. Big thanks to Josh taking time out of their day to come do this. It's all free stuff. And then last but not least, I will be doing a normal stream following this, just as an FYI. So if you want to look at some other meme coins or whatever, stick around, whatever. But that'll do it. Thank you guys.
Bye.
Take care. See ya.